Opendoor is still being traded like a housing market mood ring. Rates go up, stock goes down, rates go down, stock goes up. Everyone nods like that's the whole analysis. It's not. For educational purposes only, not financial advice. Welcome to Epic Money Mindset, the place where ambitious people come to master money, build wealth, and create real, lasting financial freedom. Now let's get something out of the way early. Yes, Opendoor operates in real estate. Of course, the housing market matters. Mortgage rates matter, transaction volumes matter. But here's the mistake. People act like housing conditions are the only thing that matters. That's like saying Amazon lives and dies by cardboard prices. The stock didn't crash toward 50 cents because the company forgot how to operate. It crashed because the market quietly decided this thing might not survive. And once survival gets questioned, valuation stops being math and starts being a countdown. At that point, you're not pricing a business. You're pricing time. Then came the warrant issuance, which a lot of people treated like some kind of bullish victory lap. It wasn't. It was management calmly saying, "We're not dying on your schedule." That one move extended runway, reduced existential risk, and quietly made life a lot more uncomfortable for short sellers who were betting that time would do the work for them. Markets don't price stories. They price probabilities. And once the probability of failure dropped, the stock had to reprice violently. That's how you go from pennies to double digits without the housing market suddenly turning perfect overnight. Now, this is where I part ways with most analysts. I don't look at Opendoor and ask, where are home prices going next? I ask, why does buying or selling a house still feel this miserable? Because let's be honest, residential real estate is a trillion-dollar industry that somehow still runs like it's powered by fax machines. Guesswork and crossed fingers. Title over here, insurance over there. Agents everywhere. Fees stacked on fees. Timelines that feel more like polite suggestions than actual commitments. And that mess exists whether housing is booming or frozen solid. This is where leadership choices start to matter, not as personalities, but as signals. Opendoor's CEO, Kesnajation, comes from Shopify, a company that looked at commerce and said, why does this suck so much for people? Then they went out and pulled payments, financing, logistics, and tools into one place so merchants didn't have to duct tape together 10 different services just to function. Translate that mindset to housing and the opportunity becomes obvious. Title, insurance, closing, pricing certainty, coordination. Those are the merchant services of real estate. Nobody enjoys dealing with them, they're just tolerated. If Opendoor can pull even part of that chaos into a simpler, faster, more predictable process, the value isn't in guessing where housing goes next. It's in owning the transaction itself. There's also a philosophical angle that doesn't get talked about enough. At Shopify, the mission was to take advantage away from massive incumbents and give it back to the end user by removing friction. Housing has the same imbalance. Complexity protects intermediaries. Consumers pay for it with time, stress, and very large checks. If Opendoor can reduce that friction, fewer handoffs, clearer pricing, faster closings, people don't need a red-hot housing market to want that. They just need to be exhausted by the old way. That's why I don't see Opendoor as a pure housing bet. Yes, housing cycles will impact results. But if the value proposition is clear, adoption matters more than rates at the margin. Efficiency gets chosen in good markets and bad ones. The market keeps pricing Opendoor like its destiny lives and dies by mortgage rates. The strategy suggests something else entirely. An attempt to modernize one of the most inefficient consumer transactions in the economy. Now, let's be clear, this isn't a fairy tale. Execution still matters. Profitability still has to show up. Capital discipline isn't optional. Housing is unforgiving, and this is not a guaranteed win. But here's the interesting part. If Opendoor succeeds even a little, not perfectly, just meaningfully, the upside won't come from housing prices going up. It'll come from people choosing a process that feels faster, cheaper, and less miserable. And that's a very different reason for a stock to move. Right now, Opendoor lives between two identities. One is a housing cycle trade. The other is a platform trying to clean up a broken system. The stock trades the first story every day. The company appears to be building toward the second. That gap between what the market trades and what the business is trying to become is where volatility lives. And sometimes, that's also where opportunity hides. Thank you for watching Epic Money Mindset. If this brought value to your life, stay connected and pass the insight forward. I'm grateful to have you here. And I'll see you in the next video.